Welcome to the Finance Paint. Today, we're going to paint a picture of what might just be one of the wildest financial stories you will ever hear.
All right, before we jump in, just got to do the usual quick heads up. This is all for informational purposes, okay? It is not financial advice. Everything we're talking about today comes from stuff that's already out there, publicly available.
Okay, let's just start with a crazy question here, because it really gets to the heart of this whole story. What if the President of the United States sold you a lottery ticket? Seriously, a chance to get rich, like overnight, but they're the ones setting the odds.
Well, that crazy hypothetical question, it actually happened. So let's dive right into it. We're going to unpack the insane launch of a crypto coin by a sitting president and, why it basically set off every ethical alarm bell imaginable. So what are we even talking about here? It's something called a meme coin. And you got to understand, this isn't like buying a stock in a company that makes stuff or has profits. No. A meme coin is all about hype. It's pure speculation, driven by what's trending online. Think of it like a digital lottery ticket. It doesn't really do anything. And for you to make money, somebody else somewhere has to lose it. That's the game.
And this whole thing launched, it was a blur. It happened so fast. January 17th, boom, the Trump coin is live. The very next day, it's all over social media. And then, get this, less than 48 hours after the first one, a second coin, the Melania coin, just drops out of nowhere. It was this crazy whirlwind that left pretty much everyone's head spinning.
Yeah, you can imagine. This move immediately set off all kinds of alarm bells. Former White House ethics advisor Norm Eisen, he basically said this might be the single worst conflict of interest in the modern history of the presidency. So what made it so bad? Why was it so dangerous? Let's break that down. Okay, so the main problem here is really twofold. First, you've got a president who can literally move markets with a single post, right? And now he's set up a way to personally profit from that exact power. And second, and this is a huge one, crypto can be anonymous. So what's to stop a foreign government from secretly buying a ton of these coins? They could funnel money directly to the president to buy influence, and it would be almost impossible to trace. That's a massive red flag, and it potentially blows right past the Constitution's emoluments clause, which exists for the very reason of stopping that kind of foreign corruption. All right, now let's talk about the money, because the financial roller coaster that came next, it was just absolutely insane. Honestly, the numbers we're about to look at are kind of hard to wrap your head around. First off, let's just look at who owned this stuff. A staggering 80% of all the coins, 80%, were held by entities tied to Trump. So right away, this wasn't some decentralized, community-driven project. Nah, the game was pretty much rigged by insiders from the get-go. And fueled by nothing but social media hype, the on-paper value just went vertical. In less than a single day, the total market value, and that includes all those coins the insiders were holding, skyrocketed to an unbelievable $27 billion.
At the absolute peak of this madness, a single coin, which was launched for pennies, mind you, was trading for over $75. Can you believe that? This was it. This was the top of the roller coaster. That moment of pure euphoria right before the big inevitable drop.
But come on, we all know how this story goes, right? Anything that goes up that fast, especially when it's built on pure hype, it usually comes down even faster. So let's take a look at the crash that was bound to happen. And yeah, the collapse was every bit as dramatic as the climb up. From that insane peak of over $75, the price just cratered. It wiped out billions in paper wealth, and eventually it settled way down, under $5 a coin.
So just to put a number on that, the coin lost over 93% of its peak value. 93%. Billions and billions of dollars in paper wealth just poof, gone. It left behind a trail of absolute devastation for anyone who got suckered into buying at the top.
It didn't take long for analysts, reporters, and even a Senate Banking Committee report to call this thing what it was, a textbook pump and dump scheme. It's a classic move. Insiders use a ton of hype to pump up the price. They create this crazy buying frenzy, and then they dump all their shares right at the peak, leaving everyone else holding a worthless bag.
And when the dust settled, you had a story of two completely different outcomes. On one side, you had the winners, this tiny little group of insiders and big money crypto whales. We know from on-chain data that one single investor walked away with $53 million. Insiders as a group, they raked in over $350 million. And on the other side of that coin, the losers, we're talking over 800,000 regular people who lost a combined estimated $2 billion.
Well, the fallout from all of this eventually led to some official investigations, and a U.S. House Judiciary Committee report didn't mince words. It concluded that the president's crypto policies were, in fact, used on purpose to benefit him and his family, adding billions to their net worth.
So after all that, what's the lesson? What can we take away from this? Well, this whole incredible story basically gives us a perfect playbook on how to spot the red flags of a scheme like this in the future. So here they are, 4 critical red flags that this whole saga screams at us. Number 1, huge insider ownership. That 80% number should have been a blaring siren. 2, it has no actual use. The coin didn't do anything, it was just for speculation. 3, watch out for celebrity hype. When the value is all tied to one person and not a real product, that's a recipe for disaster. And 4, and this is a big one, read the fine print. You gotta read it. In this case, it literally tried to stop investors from banding together to sue.
And if you want to boil it all down to one devastating number, here it is. A forensic analysis found that for every $1 the insiders made, regular investors lost $20. Think about that. A brutal 20-to-1 ratio that just perfectly shows who carries all the risk in these kinds of schemes.
So at the end of the day, this whole story leaves us with one really important question you've got to ask yourself before you ever think about jumping on the next big hype train. In the wild world of meme coins, is the joke really on you?